So right now, with the combined data set, we've got coverage on every major business or every private business in the United States. And as I mentioned, there's about 30 million of them. And so we have information on every of those businesses in the U.S. And we currently are able to provide insights into about almost $4 trillion worth of capital.
Welcome to the Tearsheet podcast. I'm Zack Miller. Earlier in 2019, Equifax acquired PayNet, a company that provides commercial credit risk underwriting to online and alternative finance lenders. Bill Phelan is the co-founder of PayNet and is now the Senior Vice President and General Manager of Equifax's Commercial Solutions Group. The combined entity now covers about 30 million U.S. private businesses and about $4 trillion worth of capital. Bill joins us on the podcast to talk about the intended synergies of bringing together Equifax's data with PayNet's. We then discuss what's driving the growth in non-bank lenders targeting SMBs and how small banks are investing in tech to take share back. We also cover some of the nuances of digital lending, like how it's more inclusive for minorities, women, and rural borrowers. Bill Phelan is my guest today on the Tearsheet podcast. Before we continue with our program, I'd like to thank our sponsor, MX, for supporting Tearsheet's work. MX is the leading data platform for banks, credit unions, and fintechs, enabling its clients and partners to easily collect, enhance, analyze, present, and act on financial data.
Hi, Zach. Good morning. My name is Bill Phelan. I'm the Senior Vice President and General Manager for Equifax Commercial Solutions. And the Equifax Commercial Solutions is the commercial credit information and marketing information services provided by Equifax to U.S. financial institutions. And we also serve telecom companies and banks in the United States. We have a global business that's commercial as well. I'm focused initially after the merger with PayNet on the U.S. business.
So let's talk about PayNet before we jump into the Equifax story. Obviously, there's a story there. Can you share that with us?
Yeah, absolutely. Zach, what I found in 2000, it seems like eons ago, was that the commercial credit market didn't work very well in the U.S. And what's interesting is that anywhere you look at commercial credit in kind of even history, we find that commercial credit is associated with wealth. There is this kind of relationship between access to capital and the creation of wealth. And, just look at history. You've got the Medici family was the banker to the Pope. They were able to, fund the, some of the great families and some of the Roman Catholic Church in the 14 and 1500s. Then you had the Bank of England come along after that, and they were another form of credit and capital that helped, the sun never sets on the English Empire. And from there, now we've got the rise of American power through really the capital markets and credit. So credit's always been associated with wealth and power. And what we have and what I found back in 2000 is that the access to capital for half of the U.S. economy was really didn't work too well. And it was the access to capital for private companies. There's farmers and doctors and small trucking companies and printing companies and metal benders and all kinds of businesses. And they really struggle and still do with access to capital. And so I founded PayNet to fix that issue. We built PayNet up to be one of the largest credit databases in the country. We covered 24 million businesses, and we rated the credit on about almost $2 trillion worth of their debt outstanding. And that was particularly valuable because it really would help the lenders grant capital to small business. If you're an investor and you don't understand what you're getting into, it's going to be hard for you to make a loan. Whereas if you have the PayNet information, you could make that loan faster and you can make it with a lot more confidence. And so PayNet was founded on that basis, and I ran the business all the way up until 2019 when we merged with Equifax, and now I'm in my current role.
And what does the combined entity look like now that PayNet has joined the Equifax family? How has that, I guess, impacted the product or the coverage set?
Yeah, that's a great question. And that was really the impetus for this combination because, at the time, PayNet was doing really well as a kind of private company. We were growing nicely, and we had good partnerships and, a growing, expanding client base. And we did start to partner with Equifax. And what we found was that 1 + 1 = 3 with the database. And what I mean by that is that when we looked at the PayNet data, we found that there was a lot of information, like I said, of almost $2 trillion of information on kind of term loans and, a businesses, mortgage loan and things like that. But what we found when we looked at the Equifax database was that there was about 1.6 trillion in short-term loans for credit cards, loans for phone bills, loans for light bills, things like that. So there really wasn't that great of an overlap, which sounds like it might not be a good thing, but it really was a very good thing when we found that the combination of the two databases provided a better picture on these privately held businesses. And so right now, with the combined data set, we've got coverage on every major business or every private business in the United States. And as I mentioned, there's about 30 million of them. And so we have information on every of those businesses in the US. And we currently are able to provide insights into about almost $4 trillion worth of capital at this point. And so we don't have everything, but we've got a really big part of it. And it really is the digital asset is really the kind of crown jewel of this combination, because what it does is, and what we're finding from clients, is that it makes their lives easier.
91% of mobile banking users prefer using their app over going to a physical bank branch. But it's no longer enough just to offer an app. Customers demand a really good experience. That's where MX comes in. Its new mobile app, Helios, helps banks and credit unions stand out in today's world of mobile banking, going beyond simple transactions and account management. Does your mobile app get thousands of 5-star reviews? Does it increase your engagement and lead to higher brand loyalty and ROI? Check out Helios by MX at MX, that's the letters M and X.com. And given that expanded coverage, does that mean, is it the same customers now, your same clients buying more data or getting access to more data, or does this also open you up to different types of lenders?
Yeah, it's a really good question. And what we find is that the current customers can benefit by not having to go through separate vendor management, right? I mean, the vendor management process for a bank or a telco or a utility, in vendor management, just for the audience's sake, it means, signing up a supplier. So making PayNet a supplier or making Equifax a supplier can be a really drawn out process, and it could take months to go through that process. And so by combining this data together and combining these entities together, we can get that process done faster and just do one vendor management instead of two. And so our customers have found that to be a benefit, number one. But more importantly, what we find is that the hit rates when the customers search our database actually go up. And the hit rates have gone up by anywhere from 4 to 8%. And what that means is that when they search the database, they get a higher chance of finding what they're looking for. And it's in some cases 8% higher, which is a big number. It's a lot of more hits and a lot more ease of access to information. And then the final thing that we found is that I mentioned kind of the data sources and the types of data, and we get really geeky about this and pretty wonky about types of data. But putting together that short-term debt with that long-term debt creates a comprehensive view of the data of the customer, of the borrower. And that results in a better view into the credit profile or into the capacity of the small business. And so, let's just take a farmer, when we know, what they spend and have to buy for seed, and we know that they have a new grain silo, and we know that they just bought a combine, and we know that all that stuff is combined into one view of the business, then it makes it much easier and more predictable to give that next loan to the farmer. And so it just makes life easier again. And so we found is just the higher hit rate, the higher combination of information makes just the process of granting credit so much easier, and it lowers the cost for our customers, and that's usually like a 15 to 20% financial benefit for them.
That makes a lot of sense. I mean, I just want to, shift gears a little bit now. It took a while, but we're starting to see a big ramp in the number of non-bank lenders targeting SMBs. Can you talk about sort of what's behind that trend?
Yeah, absolutely. And that's a part of the problem that I set out to solve when I started PayNet, and part of the march we're on and the mission we're on to combine with Equifax, because what we find is that, it's at best a 45-day process to get a loan from a bank if you're a small business. And so let's just go through that process. You've got to, meet with the banker, and then you've got to present really a comprehensive set of financial statements. So you'll have to give maybe 5 years of your financial statements. That's a profit and loss statement, a balance sheet, and a cash flow statement for 5 years. And then you'll have to present your tax returns as well. And then the banker might even ask you for things like a business plan, or they might ask you for things like accounts receivable details or accounts payable details or inventory audits. And all that results in mounds of paperwork. And so there's a mound of paperwork that the small business has to go through. And that's why it takes 45 days, and what we find is that that's a really expensive process for the bank. And it's a really expensive process for the business owner, because the business owner really just might have a project imminent and a project that needs to get capital today, but they have to wait 45 days to get that capital. And then there's the uncertainty over that 45 days for the business owner. Like my buddy runs a kitchen design and remodeling shop in Chicago, and he just found a new cabinet supplier. And this cabinet supplier can lower the cost of the cabinets that he supplies to his end customers, but it can also result in a higher quality of a product, because he found a new source out of Pennsylvania. But he needs capital. He needs to go get $150,000 to, put those cabinets in his showroom and show people what he's got. And so if that process takes 45 or 60 days, or if he gets denied, he can't put that stuff into his showroom and put those new cabinets in. He's got a great store right on a well-traveled street in the northern suburbs of Chicago. And so he's really well placed, but he just can't get those cabinets in there to show the world what he's got, And so what he could do is go to a fintech, and yeah, he's going to pay more, but he's also going to be able to get his cabinets in the store faster, and that might result in more sales for him. And it might result in getting business done faster for him and lowering his costs in the long run. And so we're finding that the speed of access to capital is an important piece of success formula for small business. And we're also finding that the mounds of paperwork is something that they just don't have the appetite for. And so these are things that are making life easier for businesses. It's not a perfect system yet, nothing is, but it certainly is a step in the right direction to fixing the broken credit market for small business.
So you have these non-bank lenders that stepped in to fulfill that opportunity there. Well, how are smaller existing banks, how are they competing against that? Yeah,
and that's a great point, because what we're finding is that the banks are waking up to the fact that this is the small business Main Street America is kind of the core market. And so we're finding that banks are looking at new technology now, and they're finding ways. And so, for example, one thing that we're doing in some new technology that we just invested in is the financial statement collection. I went through that whole process of collecting 5 years of profit and loss statements and balance sheets and whatnot. Well, what we found is that the technology today exists and tech is really the game changer here, because that can change fundamentally this credit problem. And we can actually pull the financial statements now electronically from the business owner. And so that it could be a really simple process that can take something that might take weeks, and we can literally get it done in 24 hours. And so there's this new software available, and the community banks are starting to use that software to digitize the financial statements up front, instead of having to get paper-based statements and then type them into a database. And so this is one way that the community banks are kind of leveling the playing field and be able to bring tech into their own shops.
So you mentioned, Bill, in some of your explanations, that and in your examples you gave, like, a farmer borrower or a small business owner in inner city. Like, is digital lending actually more inclusive for minorities, women, and rural borrowers?
What's really interesting about it is that, in digital lending, you can go online and you can fill out an application online, and it usually only takes about 6 or 8 data points to apply. So you can go into an online system and you can type in name, address, phone number, and then from there the system can now access data sources. And so, like with PayNet, what we do is we link into these electronic application systems. And so when the application is filled out, and it's only 6 or 8 data elements that are filled out, the system will automatically call out to PayNet through the computer and pull that data back in. And what we found is that that's one example where, the computer's blind, right? The computer doesn't know who's asking the questions or anything. It's just going out and getting data and returning it. And so you can get more of a empirical look at the credit that way. Another way that really works well, and what we found recently, was that the access to capital in low income areas for businesses is really limited in certain ways by the fact that there just isn't kind of capabilities there to serve that market. And so if you put capabilities and, again, technology and software and data and analytics together, you could serve the rural market even from a metropolitan area like New York, for example, through digital means and digital systems. And then the same thing with rural and low income can both be served that way. And so, again, the computers are agnostic. They just really want to, do their job and go out and call out for information and bring it back and assemble the credit file quickly. And then it can even get to the point where the computers can actually serve up a profile of the business for you. And that profile could, give you a sense for things like, cash flow and debt service coverage ratio and some of the classic credit ratios that you use when you're assessing credit.
So, Bill, we have time for one last question. I have a question for you. You've been building PayNet for all this time, sold to Equifax, and you're running this commercial group now. What are your biggest priorities for the rest of 2019 going into 2020?
Yeah, and the merger with Equifax has been really interesting because what we found is that Equifax purchased PayNet, but the reality is PayNet is running the Equifax commercial business. And so it's a reverse merger in some sorts. And what we found is that what's interesting about that is the PayNet operating system for, evangelizing access to capital, number one. Number two, using thought leadership to help people understand the importance of access to capital for Main Street America. Number three, solving the most thorny business issues of our customers. And these are banks, these are fintech lenders, commercial finance lenders, and then these are also now telecom companies. And every small business needs a phone, right? And so having access to the great communication systems is a great way to enable business to get done. And so we're helping in that way as well. And then the other is utility markets. And so there's all these broader markets now that we can serve as a much larger database and a much larger footprint. And the Equifax brand is great. Everybody knows us. And I think PayNet was kind of the best story that nobody ever heard about. But now we've got the innovation of PayNet, we've got the entrepreneurship of PayNet, along with the capital and the brand of Equifax. And so we've got I think a great formula for fundamentally changing how capital is accessed for Main Street.
Well, thanks for joining us on the Tearsheet podcast today.
Oh, thank you, Zach, for having me.